So I took a loss on this trade. My loss here is roughly between 2 to 3%. I sold the stock today. So as you can see, the market is still on. I have sold the stock. I have taken my loss. And let us discuss, why did I buy this stock? Where did I buy this stock? And why did I take the decision to sell the stock today? Why did I not wait? Okay. So I had a lot of expectations from this stock, but it did not deliver on my expectations. So here is the base that I have drawn for you. Okay, the stock is in a nice uptrend. If we put the moving averages, you see, I bought the stock on this day near that yellow line, very close to that yellow line. Okay, I put in a market order with a 5% position size. So as you can see at that point, the price is above the 50-day moving average, which is the blue line. The blue line is above the green line, which is the 150-day moving average. And the green line is above the red line, which is the 200-day simple moving average. This is a daily time frame chart. So this is a strong stage 2 uptrending stock. So that is one reason why I decided to enter the stock. Number two, the base started from here, from this green candle. So I start counting from this candle. I want minimum 10 candles in the base. 10 candles means minimum 2 weeks of consolidation. So here you comfortably have more than 10 candles in the base. That's another reason I decided to enter the stock. Number three, just before this day, so if I do this, this is what I saw. See, just before this day, okay, when I bought on the breakout, the stock completed 4 points. So let me draw it for you. So this is point 1, that's point 2, that's point 3, point 4, point 5. So the stock has 5 points in the base. I need minimum 4 points in the base because I want to see a couple of corrections in the base. One thing you notice here is point number 3 is outside the base. That is not an ideal situation. Okay, so this is where I have violated one of my rules. I want the buy point to be inside the base, not outside the base. But I will tell you the reason why I violated this rule. This reason is very important. Sometimes I violate my rules because other factors are in my favor. For example, if I convert this to a bar chart, look at the tightness in price here. Okay, almost 5 candles closing in the green zone. The green zone is the top quarter of the base. So if there is such tight price action and closing in the upper quarter of the base, the stock is showing strength. This is one reason I violated my own rule. Okay, I said I will take the risk. As the stock comes out of this base, I will take that little bit of risk. There are many other reasons why I violated that basic rule. Here are the reasons. You see the notes that I have written here. This is what I wrote before I bought the stock. So let me explain what these notes are. Okay, so the first number is 82. This is called as the master score. Master score is a score given by the MarketSmith India platform to a particular stock. They look at it, they look at the technical and fundamental factors of the stock, and they give a score basically to a particular stock. And I prefer this number to be more than 80. If it is more than 80, then the stock is strong technically and fundamentally compared to other stocks in the stock market. So this is above 80, which is a positive sign. Number two, 95. This is called as the EPS rating. Now, to calculate EPS rating, what MarketSmith is doing is they are looking at the earnings, stability, consistency, and growth of a stock and comparing that earnings, stability, consistency, and growth to all other stocks in the Indian stock market, and they come up with a rating or a ranking. So this 95 basically means that Dixon has done better than 95% of all the stocks in the stock market when we look at their earnings stability, earnings stability, consistency, and growth. They look at quarterly earnings, they look at recent 2 quarter earnings, They look at annual earnings and they look at 3 to 5 year earnings, and they also look at the stability factor of the earnings. So 4 or 5 factors go into calculating this number, and this is very good sign. Okay, so the stock is displaying strength across the ratings. 90 is the price strength. So basically, this means that this stock has done better than 90% of all the stocks in the Indian stock market on a 52-week performance basis. The 52-week performance of this stock on this day is better than 90% of all the stocks in the Indian stock market. So this is a clearly a outperforming stock. B means this is the institutional demand. I want the institutional demand either A or B. There is A, B, C, D, E. I want it to be B or A. Okay. So this has very good institutional demand. 25 is the rank of the group. So MarketSmith divides the entire stock market into 197 industry groups. Out of 197 industry groups, if we rank all of them in terms of their 6 month performance, I want to look at the top 40 industries, which is the top 20 percentile of industries in terms of performance. So this stock comes in that. Okay, this is a outperforming stock from an outperforming industry. Okay, so till here everything looks fantastic. Now let's look at the fundamentals. 107 represents the quarterly growth in the earnings per share. Now let's say I am looking at the earnings per share of June quarter. If I compare the earnings per share of June quarter of 2024 with the June quarter of 2023, and if I look at the growth, this is the number that I get. So this is annual, but displayed on a quarterly basis. So what is my earnings this quarter compared to the same quarter last year? I want to see that growth. That's annual growth. Okay. So quarterly EPS growth, okay, calculated annually is 107%, which means the earnings have doubled in 1 year. Similarly, sales growth is calculated the same way. Sales have doubled, earnings have doubled. Okay. Next, 3 means what is the base count? So I'm writing the base count. So as I have discussed with you earlier, a stock which is in a stage 2 uptrend, it will form multiple bases on the weekly chart. And if you count these bases, you will know in the journey of the stock where exactly you are. Okay. So stage 2 is divided into early stage, middle stage, and late stage. Early stage consists of base 1 and base 2. Middle stage consists of base 3. And late stage consists of base 4, 5. It can even go up to 8 bases. Okay. So anything above 3 is considered to be late stage, because it is found that by the time a stock goes from base 1 and 2 to base 4 and 5, it has already given a triple digit return. Triple digit doesn't mean 100%. Triple digit could also mean 300%, 400%, sometimes 500% return in the stock. You can see that on weekly chart of multiple stocks which have created that many bases. So this is base number 3, which means I am buying the stock in the middle stage. So which means the stock has already gone up probably 50% or 75% from base 1. Now I'm not showing you base 1 here. For that, we'll have to go to the weekly chart, but I want you to focus on these numbers here. Why am I looking at all these numbers along with the chart? That is important so that you also start looking at same numbers. Okay. And I hope you are taking notes. Okay. This is extremely important. I will explain to you what parameters ideally we should look for here, but currently let me explain what I am doing here. And last is D. D means daily. I am taking the trade on the daily time frame chart. I am not taking this trade on the weekly time frame chart. I have drawn the base on the daily, and I have looked for a tight price action and a proper buy point on the daily time frame chart. So the high of this candle becomes my buy point, and that is where I decided to buy the stock. And I was expecting high volume breakout, which I got the next day. So the stock proved itself. After all of these factors, I invested in the stock, put 5%. The stock proved itself. I immediately kept my stop loss at 8% at this red line. and I immediately kept my mental stop loss at this blue line, which is point number 4 in the base. Okay, I have drawn the base for you earlier. So mental red color line means the hard stop loss which I have kept with my broking platform. Mental stop loss means if the price closes below this blue line on a particular day, just 5 minutes before the close of that day, I will sell the stock. Okay. Now here, if I remove this, I have followed a principle which I learned from Mark Minervini. What he says is that the moment a stock breaks out from a proper consolidation point, you start counting days, the up days versus down days. Okay. Now I look at up days versus down days in terms of color of the candle. So let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of 10 candles, there are only 2 green candles. Okay. Out of 10 candles, there are only 2 green candles. Number one. Number two, out of the 2 green candles, one candle is a low volume candle. This is a low volume candle. This is not a high volume candle. See, the volume on that day was 565,000 shares traded, but the average was 582,000 shares traded. So one negative factor is out of 10 candles, 8 are red, 2 are green. That's a negative sign. Out of the 2 green candles, only one is high volume, another one is low volume. Okay. That is the reason why I did not wait for the stock to close below the blue line. I just said, this is too much. I mean, I've been waiting for 8 days. It's been 2 weeks. I am waiting for the stock to stage a pullback. I expected the stock to start pulling back from here after this at least. But it seems that there is general weakness in the market. The global market does not look good. From US, some data came yesterday which says that the recession in the US is imminent, which is why globally indices are acting poorly. So I said, okay, if indices are acting poorly, obviously that is going to weigh on the stock. Now, if you see the volume here, the volume is low, which means institutions are not selling. So it makes a case for me to stay in the stock. However, if I am getting 8 out of 10 candles as red color, that is not what I expect from a growth stock. This is not what I expect from a stock that is showing doubling of earnings in a particular quarter. So if there was 50-50 ratio, like half were green candles and half were red candles, I would have probably stayed in the stock. And this looks like it's probably going to close below the blue line. Okay. So I took a loss of, I think I sold it at 12 o'clock, maybe 2.65% loss I took. Okay. Even before it started to come down below the blue line, I said, no, it is not a good opening. There is no strength. I don't see volume coming into the stock. The stock will probably close lower. It is going to close below the blue line, most probably. Okay. When we consider probabilities, okay, the stock is not likely to close stronger because it's already been more than 4 hours of trading. Okay. And the stock is still languishing, which means what? There is weakness. Probably this has got nothing to do with this stock specifically. Probably it has got to do with general market sentiment. Most of the stocks are not doing well. Okay. And yesterday I created a video where I rejected 15 stocks in a row, which had properly set up with a base. But for one reason or another, I ended up rejecting those stocks because when the chart says buy, there are other parameters which say don't buy. And when some parameters like this tell me that I have to buy, then the chart is not right, which means there is weakness in the market. I am not finding stocks which are showing strong parameters as well as tight base formation. So probably this is the period when we have to wait. I am recording this video on 5th of September. I don't know when exactly I will publish this on my channel. But as of today, as of 5th of September, I see weakness in the market. The number of stocks that are coming on my radar every day is also decreasing. So this is like giving me a feel of the market. Okay. I don't look at the index to gauge the market. I look at the price action of stocks in my portfolio. Now you tell me, if a stock with such fantastic stellar numbers, if this kind of stock is doing this much weakness, then imagine what is happening with other stocks, majority of other stocks. Okay, there might be one or two exceptions where the stocks are just skyrocketing, but those are extreme exceptions. In general, if any stock having worse number than this, it is falling even faster. Okay, so I don't like to book an 8% loss, although I keep an 8% stop loss. But personally, I like to keep my losses much below 8%. So here you could see 2.5, 2.62% loss, something I booked here, which is, I mean, it's easily recoverable. So I'm waiting for another opportunity. Why should I risk my money when the general market sentiment is down? Let me see for another 4 or 5 days how the market does. Maybe it will collapse. I don't know. But I have booked my loss to 2.65%. I don't want to expand it to 8%. This could easily collapse to 8%. Even today, it can happen within a couple of hours. I don't want to take that risk. If 8 out of 10 candles are red, that's a clear sign of weakness. I have given the stock enough room to fluctuate. Okay, it's not that I sold the stock in a hurry. It's not that I gave it only 1 or 2 days. See, after I bought the stock, I waited for an entire week, even with such high volume. Okay, the stock was showing weakness. So I should have sold the stock entirely with profit on this day. In spite of that, I gave the stock some time because because of these numbers, and the stock did not perform as per my expectations. So I am out of the stock with limited loss. Okay. Now these numbers, the master score I wanted to be more than 80. The earnings rating I wanted to be more than 80, preferably more than 90. The price strength, the relative strength, I want it more than 80, preferably more than or equal to 90. The accumulation distribution rating, the buyer demand, I want it to be A or B. If it is C, D, or E, I am not interested. The group rank, the industry rank, I want it to be 40 or less than 40, preferably less than 20. Okay, out of total 197. The earnings growth, I want minimum 40%, 40%. If it is not having 40%, then at least 25% growth in EPS with accelerating rate of growth for the past 3 quarters. Similarly, sales, I want the recent 2 quarters average sales growth to be 40%. And if that is not the case, then I want this number to be minimum 25% sales growth quarterly and accelerating rate of growth for the past 3 quarters. This number, I would prefer it to be 1, 2, or 3 because this is the base count. The sooner I buy, if I buy it in the early stage or middle stage, the better it is. Okay. And this doesn't matter whether I'm taking a day, the trade on a daily or a weekly chart doesn't matter because most of the trade, like 99% of my trades, I'm going to take on the daily chart with a proper buy point. But I also use the weekly chart to find out where exactly is the pivot point. As per weekly, what is the pivot point? Pivot point is the point of least resistance where there is least supply. Buy point is a point on the daily chart where I get the exact buy price, which is the high of a particular candle. So there is a difference between buy point and the pivot point. Pivot point is something that comes on a weekly chart. Buy point is something that I look for on the daily time frame chart. So this is the trade that I have discussed with you. Nothing wrong while taking this trade. I have done nothing wrong here. Okay, this was a proper trade. The only rule I violated is that the buy point was above the base. That's the only rule I violated. But I could justify that violation with these stellar numbers. Okay, so sometimes we have to be flexible. Not every factor will fall into, not every factor will be in favor. One or two factors will be uh, uh, here and there, but that's okay. We have to manage. That much flexibility we have to show as professional traders. I suspect that probably if there was no general weakness in the global market, this stock would probably have held above that yellow line. I would have given it one more week. So waiting for 2 weeks on a stock is good enough time. And if we are getting too many red candles like this, it's clearly written in Mark Minervini's book, Think and Trade Like a Champion, where he talks about day counting. Day counting means Once the stock breaks out, you start counting the next 3, 4, 5 days. Do you see follow through buying? Okay. Do you see follow through buying if majority out of the next 10, 12 days, if 6 or 7 days are up days, okay, that's considered to be a positive sign. Here you have 8 red candles out of total 10 candles while and after the breakout. That is not a good sign. Okay. That is why I have decided to book the loss. Why to take a 8% loss? By booking 2.65%, you can see I have reduced my potential loss by 75%. There is a difference between booking 2% loss and 8% loss. So I have booked 2 to 2.65% loss, which is like 60 to 75% less loss booked. It is very important that we limit our losses so that we can stay in the game for a long period of time and we don't give up our realized gains. I have a lot of realized gains in the past. I have explained, I have shown the trades to you. Stocks like Zomato, HPL Electric, and Chennai Petro. Those are stocks where good gains were made. I don't want to give up those gains. Okay. That is why I decided, let me come out of this. It's extremely important that we critically look at a trade which has delivered a loss to us. Did we make a mistake here? No, there was no mistake. This was a proper trade, but it's just the nature of the market. Some trades will go in your favor, some trades will not go in your favor. Those trades that go in your favor, you will stay with a 5% position size. Those trades that don't go in your favor, either you will cut the whole position or you will start reducing your position size rather than moving your stop loss up. Okay. So I hope you understood this comprehensive discussion that I have made on this talk, because it's very important that you are able to talk about a particular stock for at least 10 minutes. See, I've been talking at least for 10 minutes. I have not looked at the time. But when I start talking about a stock, if I can tell you the story of a stock and if it takes me 10 minutes, then I have understood what I am doing. So when I ask you as a student of mine, if I ask you why have you bought the stock or why have you sold the stock today, you should be able to give me at least a 10-minute talk on why did you buy and why did you sell. If you are not able to give me that 10-minute talk, that means you have not understood what you're doing. Okay. So this is a comprehensive fundamental and technical analysis of the stock. There are a lot of other things we look at, but these are the primary factors that make a stock go up. We can look at pre-tax margin, we can look at after-tax margin and return on equity and things like that. But the factors that I've mentioned here, these are the primary factors that make a stock go up. If this stock had gone up, then I have probably dug more into the business model of the company, the margins and things like that. Okay. So that would give me confidence to stay in the stock. But for now, before buying, this much information is more than enough for me to enter, because there are a lot of stocks on my watch list. If I start studying the business model of each company, I would end up doing analysis paralysis. Okay. The best way is to look at the major factors that make a stock go up, take the entry, put the stop loss. As the stock starts to go in your favor, do more study. That is, I think, a correct approach. So I hope you like this video. Thank you so much for your time. Please don't forget to like, comment, and share this video so that this channel reaches to those people who really want to become professional stock traders. So please help me in achieving that. I want this channel to reach as many people as it can, because these videos are helpful. I discuss a stock in totality. Okay. Thank you so much.